Hello. Today we are going to be speaking about the Florida real estate market, specifically in South Florida, the Miami-Dade, Broward County, Palm Beach County metropolitan area. And the numbers just came out from the Florida Association of Realtors, National Association for the month of December, completing the year 2024. So let's take a look at those numbers and see where we are, where we're going to be heading in the future. So the first item is just an infographic I have on here, and I got this from the Florida Association of Realtors. So I want to remind you, I am Jason Kaplan. I own Kaplan Mortgage Company. I've been licensed as a mortgage broker in Florida since 2001. Been helping people out for quite a while, and I follow real estate pretty well. So with that introduction, let's look into this. So as we could see on the screen here, that these numbers are just from December, the month of December. So the closed sales are up 8% from a year ago, and the sales price is up 9.3% from a year ago. That's $640,000 is the median price in the South Florida area. So it's come up, and that's kind of the big point of this. So some of the larger things to be looking at are active inventory. That's up 27% from a year ago, so we're keeping an eye on that. And the pending sales are down 13%. So with that, let's take talk about just the most important things, and that is the rapid price appreciation is still the big story. So homes in Florida in the past 4 to 5 years have appreciated 60 to 70%, a lot. It just depends on the market, specifically the geographic specificity of where you live, in the area. But in South Florida area, it's kind of been tremendous growth. So that is the first thing. So let's take a look at this first number here. So monthly, you could see, so starting in January of 20 through now, January of 25, you can see here the Miami, Fort Lauderdale, West Palm. You see the median sales price is now 500,000. It was, 270 five years ago. So that's been a big factor in all of this. So the next big thing is the supply of inventory has been increasing. You can see here 7.4 month supply currently in January 2025. You can see where it's been. So we're watching the direction of the inventory, which is a pretty big indicator for is the market going to crash. So we're watching that. And then the next thing is what I've noticed, and some other people have noticed as well. It's if you look at this, it is the price decreases right here. You can see this 4,128. I've been following that every day, and that is the homes that are currently listed on the MLS system that have reduced their price. So that number is something that is being followed to kind of see where prices are going in the future. So this is the most current information right there, those price decreases. There's also, obviously the amount of new listings. So those are two factors that we're looking at, that, trying to predict the future and see what's happening with the market. But that's something that I'm keeping an eye on. I'm sure a lot of people are as well. See kind of where those prices are going. Hopefully, the market will balance out. So that's a big one, as everybody kind of knows already. I believe that you can see that rates were down, in the 3% range down here, and then they've currently reached about 7%. Had a little drop below 7% yesterday, day before, and rates could be, those are the national averages of interest rates. That's just the average. Rates can be lower than that. I have lenders I deal with that, have rates that are lower than that. This is just an index to kind of get a general idea, but it's not a quote. So the next screenshot I have up here is from the it's Reventure Consulting. It's a YouTube blog I follow. I like it. Just check it out. It's very interesting. He's got a plot up here on mortgage rates and home prices. So it goes back 134 years. And so it's, I don't know, this is way back when, this area, but you can see kind of here, it looks to be around 2000 to now, the year 2000 to now. You see this divergence, and you can see how these home prices here gotten really high. And now these rates, mortgage rates, have gotten high. So, it's interesting to look at and draw our conclusions from. It might be something, I'm not sure really what to make of it, but it's definitely very interesting to me. So moving on, the other thing we have now is in Florida, you can see the average home insurance premium rates in Florida are at the top of the national average. So it just makes buying a home in Florida a little bit more expensive than other places. So the last thing on kind of the negatives on the data right now is the price to income ratios, which is basically, as you can see from here, I grabbed this from Zillow. Miami, Florida is like number 6 in the United States in terms of ranking large cities in the terms of affordability. So Miami is on their index, it's 9.2. That just means basically a whole lot of people are spending a whole lot of their paychecks and income on housing. So this is for, affordability. So it's gotten to be more expensive to live in Florida, in South Florida particularly, Miami even more specifically. So it really depends on where you're looking to be, but that's what it is. So in terms of the good things, Florida is growing. It's got warm weather, nice beaches, lots of sunshine. There's no state income tax, which is a huge draw. If people have their choice, you'd want to be here. That's why you saw Jeff Bezos come down and, move from Washington down here, just simply because it makes more sense for an income tax basis. And if you have that ability, Florida makes more sense, even with all the other negatives. So the no state income tax is a big draw for Florida, especially on the top tier. The economy seems to be doing okay. I'm keeping an eye on the job market, the economy. Unemployment claims just came in 1,000 less in Florida. So I don't know what's going to go on in the future, but right now it's fine. It's kind of more the same as usual. It's good. A lot of people are coming down here, Florida, for the the lifestyle that don't have a job. They come for the lifestyle. They also come down for the cultural diversity. And then in terms of where we're going, Freddie Mac and the National Association of Realtors are both predicting prices to increase, and you could be skeptical, and of course that's what they're expecting. But if you really look at all the information and balance it out, it's not that wild to have those predictions that the prices are going to continue to grow. So Florida's the 3rd largest state. It's over 23 million people now, and it's just surpassed New York, and they're still estimating now 300,000 people to be annually moving into Florida through at least 2026 each year. So that's like a little less. That's a little less than the size of Orlando every year, a city that size. So 900 people a day. That's a lot of people that are moving to Florida. So people do want to still come here. The net migration to Florida is still positive. Yes, it's been less than it was previously, but that doesn't really mean anything to me, because it's 23 million people, and you have a 1% increase. It's a lot, and the media has portrayed it like people are not coming to Florida. Well, that's not true. So in terms of thinking about where prices will be, really at the end of the day, I think that buyers should just make their own decisions in terms of, is it that time, whether they're retiring or being able to move, work remote, whatever it may be. That's up to the individual. Those choices should be made based on that. Looking at this data, is it a good time to buy? Is the market crashing? I don't think it's crashing right now. It's certainly, there's a lot of excess prices. So those price decreases that we saw were from the people that have purchased homes in Florida in the last 5 years, it's all gone up. So those sales expectations are going to need to come down. You're seeing some of the rate lock, they call it rate lock, people that have been locked in at these low rates that have, eventually they're going to be moving and selling, and that's slowly coming out of the system. So hopefully that will happen in a balanced way, where the that you know people will just get more realistic on their sales price expectations, and that will all balance out. So all in all, to me, it looks okay. I mean, you never know what's going to happen in the future, but I anticipate rates to kind of stay where they are. I don't necessarily anticipate a big rate increase or a large decrease in rates, based on everything that's coming through. So I appreciate the time.